investors watching your money's reaction to the State of the Union and what's ahead. Joining me right now is the Fitz-Gerald Group principal, Keith Fitz-Gerald, Constellation Research founder, Ray Wong. Great to see you, gentlemen. Thank you so much for being here. Kicking things off with you, Keith, with the market that is rallying this morning, even as oil prices hit highest levels since what? We've got at 11-year highs. Dow Industrial's up 242 points nonetheless. Your thoughts on these markets and what drives activity as Jay Powell will be speaking this morning and tomorrow in front of Capitol Hill?
Well, I'll tell you, it's a very complex issue with a lot to unpack here following the State of the Union address. I think the markets are simply having a reflex rally. The computers have determined that they sold off hard enough, long enough, and there's just some rebalancing going along with oil and inflation expectations. So the odds with Powell coming onto the Hill, everybody's trying to refocus on earnings, trying to refocus on the jobs report, but really the flight to Capitol is doing Powell's job for him.
Yeah, look at the yields right now at 1.766% on the 10-year. It's up 4.1 basis points as the yield hovers around 1.76%. Isn't that interesting that Jay Powell is going to be testifying in front of Congress today and tomorrow? He'll give us his semi-annual monetary policy update. And yet, Keith, we know rates are going to go higher. The Fed is going to be raising rates likely in March, and rates right now aren't going very far. They're up 4 basis points, but still at this low level of 1.76%.
Well, they are, and he's got an impossibly tough job. You know, the street wants him to do more, but in fact, he's going to have to do less. I think he'd be a fool to raise rates into the geopolitical storm that we've got with inflation the way it is. But the reality of the situation is he's probably going to do it to prove a point. He was so wrong for so long on the transitory call. To admit that would be tantamount to reversing course. And I don't think he's got the gumption to do it, even though that's probably what he ought to do.
Well, markets have a 100% probability that the Fed raises rates in March. We're guessing that it's 25 basis points, Ray. But the Fed has to do something about all this inflation. Let's look at oil right now, continuing to surge. There are more supply fears due to Russia's invasion of Ukraine. Brent and crude oil well above 109. Brent just hit $111 a barrel ahead of the OPEC meeting happening today. Ray, it's up 5 2/3%. Crude oil at almost 109 right now, up 5 1/3%. You think it's going to go higher even from here?
Yeah, we're probably going to see peak oil. Now, if we look at historically, in 1979, it hit $38 a barrel. That's about 140 adjusted for inflation. And part of it's because oil is coming from Russia. That's the third largest oil producing nation at 11.3 billion barrels a day. And so what's going to happen is China's going to pick up some of that, but everybody else isn't going to pick up Russian oil. And that means there's going to be a demand for oil in the refineries. And that's going to drive up the pricing for quite some time. Plus, there's no incentives. There's really no incentives for U.S. oil to actually jump in and actually add to the supply. At least nothing's been communicated yet.
Yeah, I mean, I'm wondering why President Biden did not bring up the dependence on oil last night. I mean, give me a break. We are, increasing our imports of oil from Russia at a time that Putin is making $1 billion a day, and that's funding this war in Ukraine. One of my guests yesterday said, we are paying Russia to invade Ukraine.
You're absolutely right. And we see the interlink between energy security and national security. And what we're doing right now is 10%, up to 10% of our imports are coming from Russia. And so we should be opening up the Keystone Pipeline. We should be looking at releasing some of the restrictions on, exploration in federal lands. We should be also looking at, taking existing permits and actually letting that come into play. And we're also not talking to our frackers. And so there's no relationships in place there. And it's actually creating, most of this is self-inflicted, as you're saying.
Real quick before you go, gentlemen, Keith and Ray, you got a market that's up 240 points. Are you buying this rally? Do you want to buy it, or do you want to sell into strength? Keith, you first.
I want to sell into strength, but I'm accumulating, interestingly enough, the longer-term plays that I still believe in. Big tech, for example, is tremendously undervalued when looked at the lens of the next 5 years. When Putin settles down, this market's gone like a rocket.
Ray, you buyer or seller in a 241-point rally?
I'm buying specific stocks, big tech in the Matana range, and also those that are actually have high quality earnings, growing 20 to 30% year over year, and of course are down. They're basically at 10% of their 52-week highs.
Gentlemen, thank you. Great talking with you this morning. Keith Fitz-Gerald and Ray Wang joining us this morning for a great word on Wall Street. Much more ahead. Coming up, the war on Ukraine.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below. And of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.